What up, investors? What up, traders? Ken here from the Dyslexic Investor, and we're gonna kind of go back in time slightly. So I don't know if you guys have long you guys been subscribed or not, but I did a story about our Mr. World Famous, Mr. Worldwide, Mr. Ray Dalio here. That's the gentleman in the picture right here. And he's like basically the mastermind behind the Bridgewater Associates. So if you're not familiar with Bridgewater Associates has been around for 15-20 years. They've used a lot of data in their decision on market trends, and they have been able to predict a lot of downturns before anyone else. And this was an interesting article. Again, this came out basically in like middle November, right before Thanksgiving here in the US. A lot of multiple articles like this one, I believe it was a Wall Street Journal that actually really broke it, where Ray Dalio hedge fund, he runs three or four different hedge funds, and a lot of it is a lot of high equity in there. I think it's $150 billion in each fund or something like that. It's a crazy amount. So the amount of assets he has under control. So the story was, again, this is all. He's the journal or the news is saying one thing and he's saying another, so it's still not clear on what's going on. So basically they're saying that the journal article had the Bridgewater Associates made a very complex bets on equities globally, that they will have a huge or enormous downturn in fall by March. And this is what this is not very clear on who said what, but it's just funny and very ironic that this came out of betting 1.5 billion. And it was interesting that just the other day we had Bill Ackman coming out and him saying, but his bet was basically the beginning of March. Ray Dalio and his group were saying, or they weren't saying, but there were indications of them betting the market would fall in March as well. But we're talking 3 or 4 months ahead of a lot of other people. So what did they see? Again, it's not unclear. They have such a market edge on some of the data and so how they can see markets come and go. So basically the article goes into that they've built in a 1.5 billion positions in different various options with the help from Goldman Sachs and Morgan Stanley, and that can generate a lot of returns if the S&P 500 falls and the Euro Stoxx 50 falls. So we're going to look at both those charts. Both of them basically declined 25 to 35% where they initially were. So buying put options on these contracts to see the price. So we're going to do an example in both of these. And we're going to go back on what the price was basically in November, like mid-November, and then see what the price is like to end of March, and we'll see how it goes from there. So let's go ahead and jump to the charts. Alright, so we're going to be looking at the S&P 500 and then the FEZ. This is the index that does the Euro 50 ETF. So we're going to go ahead. What we're going to do is again, this is all theoretically, so it's going to be very hard to tough. I just wanted to show these examples. So we're just going to take like let's go zoom in a little bit here. We're going to do like I want to do like the 15th, or like let's do the 19th. So basically closed at 312. So let's say they bought the 312 puts that day that expired in the end of March. So we're going to go through the trade panel here, and then we're going to go to the March put options. We're going to look at the 312. Oh my god, that's really far in the money. So here, and then we're gonna copy this little code here, and we're gonna go to the chart, paste that into the code box there, and they're gonna see the price of this. So again, we're gonna go basically to the 19th, which we'll have to zoom in. right here. So we're gonna correct bar. We're gonna see basically it's trading for like $10. Okay, so this is the open, the high, the low, the close. So we're just gonna say basically at $10 and just keep it at the low end. So $10. So that option was $10, aka $1,000 a contract. And then, of course, it declined substantially into February, going down all the way to 1. Again, we don't know exactly what they bought, so I'm just doing this, again, theoretically. And it went all the way down to 1, but then, of course, when the pandemic started and everything, and the overall sell-off, it went basically to 28, then it went to 40, it went up to 57, and up to the highest at 91. I give Bridgestone the much benefit of the doubt. I don't think they sold at 91. I'm pretty sure, I'm going to guess, they probably sold half, probably around double their price, so $20. They probably sold some more around 40, and then maybe had a little runner and sold around 50. So we're going to compile all that information. So basically having $750 million into that and breaking it even between those things, we're just going to calculate that up and spit out a number. Alright, so we have the calculator up. So again, there's the article stated that they spent about $1.5 billion. So we're just going to give the benefit of the doubt, or they're going to split it right down the middle. So we're going to do $750 million. That's a lot of zeros there. And they said, again, we put it at the price at $10, so $1,000. We're going to divide that by 1,000. It's going to give us 750,000. And then we're going to benefit the doubt, or we're just going to basically give them the price anywhere from probably, I'm going to give them $33. So 3350 times 3350 equals $2.5 billion. So basically, well over, what was that, 4 or 5 times? I can't even do the math. That's a lot of money right there, right? So divided by 700, so 3.35 times their money. And this is probably, we're going to look at the other one, the FEZ, the Euro index as well. I'm pretty sure that's going to be fairly much the same, so we're going to go ahead. Alright, so I'm looking into on what I would have traded, but again, I'm not a billion-dollar hedge fund, so I don't know on what kind of investments they put into. Because if you look back at the article, it shows a multitude of different various options they are talking about. They got help from banks such as Goldman Sachs and Morgan Stanley to generate returns on these two indexes. So I'm not sure if they created their own strange derivative from something. But buying put options on giant investments as a right to sell the stocks at blah, 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 blah. But again, it's not very clear again. That's why it's all theoretical, that what we're doing here on this some things, because if you do this FEZ and you go to the trade tab, there is like no volume. So even if we look at this $40 price, they bought in at a very cheap level, but again, this option didn't really come available until the beginning of the year. It was basically 7 cents and went to $16 at the high. So again, trade something at 7 cents, bought a put option when it first came out, and then it went up to nearly, I don't even know what that difference is, that's 1,000% to $16, because you can just look at the chart itself. Oops, my bad. What was it? FEZ, yep. So basically, you're shorting it at the very top at like the 40, and it basically got cut in half. So you're going to be paying a pretty high premium. And again, this is, I can't stress this enough. This is not, anything's proven here. This is all skeptical. This is all just theoretical and just trying to show the power of options and how powerful these wagers can be. And even betting literally a fortune on these different various put options, has created absolutely enormous returns. It's quite mind-boggling in the sense. So if you guys haven't seen one of my other latest videos regarding the Bill Ackman one, definitely get that a check out, because it kind of goes through the same process. But he basically starts shorting shorting in the beginning of March, so we can show that as well. So we're going to go to the beginning of March. So right up here, he did like 3, 4, something like that. He was saying big things are coming, big things are coming. So the funny thing is, he was saying this at 312, 310, around the same price target that Ray Dalio was saying it. But Ray Dalio said it 3 months ago, but around the same price target. Isn't that kind of strange? I don't know. Please go ahead and leave your comments down below on what you guys think. I think that there is something else kind of strange going on here, in the sense of both these individuals, again, with enormous amount of money, basically start shorting the market at the same price, but at a different time frame and time of year. So let me know if you guys have ever shorted something and got a fantastic return like these individuals did, basically making boatloads of money, of 4 or 5 times your money within a very short period of time, and we're talking billions at this point. So quite impressive. Again, if you have any questions down below, please don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.